Hey there. If you're a single parent trying to figure out your taxes, you already know it can feel like you're trying to solve a giant puzzle. Well, today we're going to make that puzzle a whole lot simpler with a guide that's made just for you.
Let's be real. Tax season brings a certain kind of stress, doesn't it? When you're juggling everything on your own, the very last thing you need is to be buried in confusing tax forms and rules. But you can relax, because that's exactly what we're here to clear up.
So our goal today is really simple. We're going to turn that confusion into confidence. We'll walk through the key benefits, credits, and deductions you absolutely need to know about. Let's start with the very first and maybe most important decision you have to make.
All right, first things first. Before you even get into the numbers, you have to choose your filing status. And trust me, this one choice can make a huge difference in whether you get a refund or end up owing money.
For most single parents, this is the term you need to remember: head of household. It's a special filing status that was literally designed for people in your exact situation. You're not married, you have a dependent, and you're shouldering more than half the household bills.
Just take a look at the difference here. If you just file as single, you get a smaller standard deduction. But if you file as head of household, that deduction gets a major boost. So what does that mean? It means more of your money is protected from taxes right off the bat, which can often drop you into a lower tax bracket. It's a win-win.
So, why does this benefit even exist? Well, it's actually pretty logical. The IRS gets it. They understand that running a household and raising kids costs a whole lot more than just taking care of yourself. This bigger deduction is basically their way of leveling the playing field a bit.
Okay, so you've picked your filing status. The next critical piece of the puzzle is claiming your children as dependents. This is what unlocks some of the biggest tax benefits out there, like the really valuable child tax credit.
Now, the basic info is pretty straightforward. You'll need your child's name, social security number, and birth date. But when parents are separated and filing their own taxes, the million-dollar question is, who actually gets to claim the child?
So here's how the IRS figures it out. It almost always comes down to this: who provides the day-to-day care? You know, who's making the meals, helping with homework, doing the bedtime routine? The parent who the child lives with for more than half the year. That's the parent who generally has the legal right to claim them on their taxes.
All right, let's move on to another huge area for potential savings that honestly, a lot of people miss out on: childcare costs. Here's the deal. If you are paying for someone to look after your kid so that you can work, you can probably get a tax credit for it.
And what counts as childcare is probably a lot broader than you think. It's not just about a traditional daycare center. We're talking about after-school programs, summer day camps, even things like soccer practice or ballet class, as long as the primary reason for it is to have your child cared for while you're at work.
Now, on the flip side, it's really important to know what doesn't count. The big one to remember is private school tuition for K through 12. The IRS sees that as an education expense, not a childcare expense, so it doesn't qualify here. Same story for most overnight camps and tutoring. Let's just put a number on this to see how it works. You add up a full year of after-school care plus a few summer camps, and it's not hard to get to a number like, say, $15,000. Now, when you see a number that big, your first thought might be, wow, what a great deduction. But, and this is a really important point, you don't get to just subtract that entire $15,000 from your income. It is not a dollar-for-dollar deduction. That's a super common mistake people make. However, what you do get is an incredibly valuable tax credit that's based on those expenses. And a credit is actually better than a deduction because it reduces your tax bill directly. This is exactly why you need to track every single dollar you spend on care. Every receipt matters. Okay, wow, we have covered a ton of ground. So let's pull all of this together into a simple, easy-to-remember checklist that you can use when you're actually sitting down to do your taxes.
So here it is, your cheat sheet. Number 1, file as head of household if you qualify. It's a game changer. Number 2, the parent handling the day-to-day care is the one who gets to claim the kids. 3, keep track of all those eligible childcare costs, after school, summer camp, you name it. And finally, number 4, remember, the childcare benefit is a powerful credit even if it's not a direct deduction.
So now you know the big 3: your filing status, how to claim your children, and how to use your childcare costs. You are no longer guessing your way through this. You actually have the knowledge you need to take control of your taxes. You can do this. You've got this.